firing directly at the QQQ, the SPY, everything was hit. The Dow fell 600 points. We'll see where it ends the day. It all was because the market did not like the CPI, even though it came in close to expectations and it was lower than the same time last year. The fact is it missed the expectation. It meant that inflation went up a little bit and all it took was a tick up. So I told you guys that those reports were going to have a big impact on the market and they sure did. Now we've got another one coming, the PPI, which is either going to confirm the CPI or maybe even give us a different data direction. And we also have housing starts this Friday. Both of them are going to have another impact on the market. Is it going to be a 1, 2, 3 knockout punch, or are we going to have a comeback story? I'm going to dive into some stocks, some big tech, and some cryptos. I think the charts are telling the story, and I'm also going to take a look at the SPX, the S&P 500. That's the ticker that keeps an eye on the overall market of the SPY and how it's performing. And I'm going to tell you guys there's something forming in the charts you guys need to be aware of. This week is going to be a critical week. It's either going to trigger a bigger move down in the coming days, or we're just going to take a small step back before we take another big step forward. Let's get into it. This is the Stocks with Josh show. Thank you guys for joining me today. Thank you for hitting the like, hit the subscribe to get the next video. And over in the Discord this morning, I was giving some technicals on Tesla and we defined the range well. I got a couple small scalps in, helping people understand how I get my setups together to make the trade. Guys, if you don't know what the Discord is, it's the Stock Squad Patreon. I'm going to leave a link for it in the top pinned comment, as well as the description of the video. That's where myself, a beautiful community of traders, Stock Up with Larry Jones, Keenan Grace, and Stockmo are all coming together to tackle these difficult markets on difficult days. Guys, check out that link for yourself. All right, let's start off with the SPX that measures the S&P 500. Now, we all know that we're at the top of the range. Nobody thinks we're mid-range. We're not at the bottom of the range. We're at the top of the range. And this is where candle observations become absolutely critical, because if we get an overly bearish candle at the top of the move, it could be signaling a new downtrend. And here's what we've got going on right now. We've got the potential for a completely bearish engulfing weekly candle, which would look like the fact that the red candle opened above the green candle or at the same price. And what we're going to be watching for by the end of this week is if it closes beneath the opening price of the previous week's candle. That's a bearish engulfing candle. And I want you to know, you got to respect those candles. It absolutely means that we would continue to move down from there. So we're going to be keeping an eye on that. I also wanted to talk about Shop because I want you guys to better understand options. I know there's a lot of beginning traders out there who bought a put on Shop and didn't make any money, even though it dropped 10%. Their earnings were not good. It came out on a day when the market was having trouble and it pulled back 10%. They gave bad forward guidance. Now, I had mentioned in the last video that the best way of playing this particular earnings was to sell a covered call, covered put straddle. And what that would look like is if you had sold a call, those calls were selling in the money at $5. So that would be a total premium value of $500. And if you had sold the put, those were selling for $3. So if you sold both of them, you would have collected the premium of $700. But then each of them would balance the other out. And so when you go to look at how they performed today, the $500 option that you sold and collected the premium, it expired and went to zero today because of how much the stock dropped. Now, what you would expect to have happened is that the put that you sold would have skyrocketed in value, but it didn't because of implied volatility. The last I checked, that put that was sold for $3, or even though there was a 10% drop, it was trading midday at $2. So when you add it up all together, you would have walked away with around $600 on it, an $800 premium. And the fact is that as time goes by, the put will continue to drop in value or get sold to someone else and you're free and clear with that $600. And that's if you had just sold one of each. If you had done 10 of each, you would have walked away with $6,000, a pretty nice win on an earnings play with low risk because you're protected either way it went. Now, I'm going through these covered call straddles, which I know are confusing for a lot of folks in my audience, but the real reason I'm explaining them is that I want you guys to understand that with these elevated, volatile markets, a lot of the earnings plays that we're seeing throughout this week are in the exact same condition as Shop, which means that even if it pops up 10% or drops 10%, you can still lose money because of how volatile the markets are. It's already priced into the premium. And once the news comes out and the stocks stable out a little bit, they tend to drop in value, not go up in value. That's something that I want you guys to understand. I'm going to get into some Tesla because we're at an interesting place in Tesla again, and I want you guys to see what I see in the charts, which is a couple patterns. We need to look at the candles. We need to look at the patterns to see if there's any clue as to whether or not Tesla's going to continue to fall or whether or not we're going to go back up and begin a more bullish journey on this stock, because it was sleeping and falling when the rest of big tech was climbing. It's got a lot of ground to recover this year, and I still think that it can recover that ground. So the patterns I want you guys to see. Now, in a smaller time frame on the daily candlestick chart, if we look closely, I see an inverse head and shoulders pattern, a smaller one. And then if we expand out to a longer time frame and we look at the last couple years, I see a larger inverse head and shoulders pattern. So both of these tell me that the stock is largely oversold and could be moving back up towards the neckline. On the smaller pattern, I see the neckline at around 192 to 193. Right? If we then crossed over 192, I think we would shoot up all the way up to $208 and test that range, which would be pretty bullish. And so that's something that could happen in Tesla right now, but there's a couple other things we need to keep our eye on. If for any reason we don't stop at 182 and we don't bounce and we don't create that right shoulder, we need to keep a very close eye on the 180.50 mark. So we're looking at $180.50. That is the line in the sand on Tesla. I've told you guys before that if we break and close beneath that, it has to break and close beneath it, because the last time we came down, we came all the way down to 175, but then we came up and closed the day back above 180. So if we get back there again and we come back beneath 180, we want to make sure that we don't close the day beneath 180. If we pop back up and we stay above 180.50, then the bullish narrative for Tesla in 2024 is still on. So we got to watch that line. Now let's take a look at some of the candles, because that's a big part of things as well. I just mentioned we're at the bottom of a run on Tesla. So we got to look at what type of candles Tesla's giving us to know whether we have a reversal, in the same way that we just looked at the S&P 500. We're at the top of the run and we're going to watch that candle for a reversal down. So the candles I'm looking at on Tesla is we recently made a very bullish candle when it popped all the way from 180 down to 175 and back up again. It gave us a very tall-tailed candle, which is bullish at the bottom of a run. We're still operating off of the bullishness of that candle. And now today we are getting a bearish candle, which means that it kind of looks like a really tall wick, rejection of the current upward move and a strong move down. That's signaling to me that we have a little bit more room to go down. And that's what we're going to be watching for tomorrow's candle. It will continue the bullish view on Tesla moving forward. All right, we're going to get into some crypto here in just a minute, but I want you guys to check out the Moomoo investment app. That's if you're looking to put some money and park it somewhere. You can earn 8.1% interest on just leaving your money sitting in the account. They'll give it to you for 3 months. That's a really incredible deal because it's a no-risk investment return. Now, in addition to that, they're going to give you up to 15 free stock. So you get some free stock. You can earn some interest for 3 months before you decide to buy the dip when we get there in this market. Guys, check it out for yourself. Click on the link in the top pinned comment. Bitcoin has reversed, and overall, we're having an ugly day in crypto, but I'm looking at a good crypto that's performing well and a bad crypto that's performing badly today, but both of them I think may be a buy. I want to draw your attention to them. That's ADA and Solana. Now, ADA's having a bad day, but when you go into the charts, you realize that the charts are still actually pointing bullish. It's pulled back a little bit today, but it's simply coming back and testing a critical level of support. I'm going to get into that in just a minute. I wanted to briefly talk to you guys about where we're at in the overall crypto market. We're still, because Bitcoin has pushed up, we're still dealing with Bitcoin dominance. When the Bitcoin run is over, which it's not over just yet because we went higher than we recently went in recent days, it meant that people were not pulling money out of Bitcoin. They were putting money into Bitcoin, which means they're not buying the altcoins right now, which means that a lot of them haven't pushed up to the heights that they're going to reach in this local trend, okay? And so when Bitcoin is done running up, and everything will take a break. Bitcoin will take a break. Maybe it won't go down to 32,000. It might go down to 42,000. Bitcoin will take a break. And when it takes a longer break, that's when the altcoins will begin to run. And then eventually after the alts, you'll see the meme coins pop. So right now we're looking at the outperformers and those that are doing pretty well. And a couple of them, like I said, Solana and ADA are going to be the focus of today. So ADA is having a bad day. It seems to be going down more than some of the others, but it recently bounced off structure support. Now, when we're talking about Bitcoin, I keep mentioning that $32,000 mark because that was previous structure support. For ADA, it ran up really nicely and it came back, and the structure support that we wanted to see it bounce off of to go higher, well, that was 44 cents, and it did that, and we've since had a nice push up. Now we're simply pulling back, and I think we're back testing the 49-cent range, but overall on the daily chart, having bounced off 44 already, that may be the local low, and this may continue to be trending in an uptrend. Next couple big targets for ADA are going to be 80 cents and then eventually $1, and I think we're going to get there sooner than most people think. And then if we look at Solana, now why am I identifying Solana today? Because in the heat map, it was gray. It wasn't even red for most of the day, which means that on bad days, when everybody is selling crypto, people are secretly buying Solana, which again tells me that this is one that's going to do well and even better than the rest of the altcoins on green days. And it also on the daily time frame bounced off of structural support. And so having tested structural support, I think there's the possibility that this could go as high as $147 when we see that shift away from Bitcoin dominance and over to the alts. That's going to be the new target for Solana in the next couple months. Now, I will tell you that when you examine the daily charts, this is a little bit of the balance to the bullishness that I just gave you. When you look at the daily charts, they're more bullish, pointing to a quicker move up right now than the weekly charts are. The weekly charts actually are not showing the same degree of strength. If you go into the RSI on ADA and Solana, I actually would like to see that momentum cool off. I would like to see it back test the 50% mark, and then I could say confidently that it's in an ongoing uptrend from here. So what we might see is this altcoin run up. We might see a longer prolonged cool off phase, get that test on the weekly time frame, or it may not happen, and then we may go up from that point forward. But ADA and Solana are ones I don't think anybody should be sleeping on because I think they're going to perform pretty well in the next bull run. I like them both. I wanted to give you guys some quick technicals. That's all I've got for you guys today. Hope you're having a great day. We'll see you over in the Discord. We're continuing my focus on teaching people about how I look at the Tesla chart. If you guys are interested in that, click on that link and come join us. And hit that subscribe button so you get the next video. Peace and blessings. Take care.